Hello class and welcome to our fourth lecture series on Principles of Accounting or Financial Accounting, and I'm your instructor Jamal Haider. Okay, now let's talk about a review here. So we talked about in our last lecture the accounting equation in which we talk about the assets is equal to liabilities plus owners equity, and we did an example here. So we also talked about that what business own is the sum of all total assets. How much is owed to outsiders? It is the total liabilities. And how much is control over the assets of insiders or stockholders or owners? That is total shareholder equity, which includes both common stock and retained earning. And then we talked about the analysis of the transaction in which we talk about the double entry system. We talked about that each transaction at least affect two accounts. It can affect two or more. We will talk about when we do some entries. So we'll see over there. So we talked about the T account in which we talk about that. If this is a T account, the right hand side is called credit, the left hand side is called debit. And what do we talk about debit and credit? That these are not plus or negative sign. Remember that these are sides. Debit is left side, credit is right side. And then we talked about the rules for debit and credit, and we talked about that in respect of accounting equation. We talked about that if asset increase, we have different categories of assets, right? We talked about current assets, long-term assets. So no matter whether they are current assets or whether they are long-term assets, if asset increase, we will write left side of the T account, right? Left side of the T account. If asset decreases, like we pay cash, we sold inventories, right? So we will write it on the right side, right? So it means on asset side, if asset increases, so remember this plus sign is for, the plus sign here is for increase, negative sign is for decrease, right? So do not associate plus with the debit and negative with the credit. No, that would be wrong. Why? Because the other side of the equation, look at here, if liability increase, these are minus, right? These are decrease. So we cannot say that debit is a positive or credit is negative, or debit is negative or credit is positive. So these are sides, okay? So when liability increase, it's debit. If liability increase, it is credited. So as with this stockholders equity. So all the accounts for stockholder equity, if it's increase, we call it credit. If decrease, we call it debit, right? So these are the rules here. So we also did this example here. So let's just reread that. So we have the company Freddie Auto Service Incorporation, which received 50,000 and issued stock. So this is a transaction. The double entry system says it at least it has to affect two accounts, right? So it means in double entry system, we also record the receiving side and the given side, both, right? So here we receive, so remember, whenever you are using accounting equation or recording transactions, double entry system, single entry system, whatsoever, so think in terms of business. So business receive cash. Cash is our asset, right? If asset increase, what did we call that? It's debit. So we record cash on the debit side. Here, 5,000 should be recorded here. 50,000 should be recorded here, right? And the capital, so company issued capital, right? Stocks, common stocks, right? So when common stock increase, common stock is over right side of the accounting equation. It means credit side increase. So here we go, right? So here we go. We have successfully recorded our transaction in double entry system. And then there is another transaction, which is Friday's second transaction would be 40,000 cash purchase against land. So business purchase land, it means cash is going out. So asset, cash is our asset. Asset is going out from the business, which means asset is decreased. When asset is decreased, we will record it on credit side. So that's why 40,000 will be recorded on the credit side. And land, we purchased land. Land is our asset. Asset increase, we record it on the debit side. And then we talk about something weird, which is here the balance, right? This balance. Let me select pen here. So this balance, right? So normally what we do, we just add it. So here should be 50,000. No. So this balance is, we talked about that, how much is the debit side greater than the credit side. So you see 40,000 here and 50,000 here. So the difference is 10,000. So whichever the side is greater, we will write over there. So the debit side is greater. So we write it down balance, debit side here, right? So this is how we write it down the balance, right? This is not the sum. Remember, this is not the sum. This is the balance, right? So a common mistake that students, they do here, they just add and write it down the total. This is not total. This is the balance, remaining balance, okay? Which means how much the debit side or credit side is greater. The greater side would be having a balance. Okay, now let's talk about the the additional stockholders equity account, revenues and expense. So in our accounting equation, we talked about that the revenue belongs to retained earning, expense belong to retained earning, and retained earning belongs to the stockholder equity, right? But in double entry system, we record revenue separately and we record expenses separately, so that we know that how much is the total revenue. In the drawback for accounting equation is that we do not have the segregated amount accounts for income statement accounts, revenue minus expenses. So in our accounting equation, we write it down all the revenues and expenses here as one number. So we cannot see that how much is the expense, how much is the revenue, right? So in double entry system, we segregate that and we record it in our separate T accounts. So revenue would be having its own T account, expense would be having its own T account. So remember, if these belongs to revenue account, right? So what if revenue increase, it would be debited or credited? So remember that one. The revenue increases the retained earning or common stock, or equity, common stock equity here, right? Common stock equity, common stock increases the shareholder equity, retained earning increases the stockholder equity, dividend decreases the stockholder equity, revenue increases the stockholder equity, and expenses decreases the stockholder equity. We talked about that. So when we convert this into a debit credit side, here we go. So Whenever there is a revenue increase mean, here we go, revenue increase mean credit. Equity increase means credit. Common stock increase mean credit. Retained earning increase mean credit. But you see, this is the opposite with the dividend and expenses. Why? Because expenses decreases the stockholder equity. So there is a negative sign here. You see, negative sign. So these do not belong to the assets. These belong to shareholder equity. So here we go. Let me change with the pen here. Sorry. So whenever there is an asset account increase debit, asset account decrease credit, liability account increase credit, liability account decrease debit. But whenever it comes to dividend and expenses, so dividend increase mean debit. So did you see a similarity here? Asset and, let me clear this. So did you see a similarity here? Asset versus dividend. So asset increase, debit, dividend increase, debit. So some students, they mistakenly consider dividend as asset account. No, although the treatment looks like that we should write down in the T accounts. If we pay dividend, which means dividend increase, so we write it down here, right? Similarly, if asset increase, we have a T account here, so we also write it down here, right? So they mistakenly say that dividend is the asset. No, dividend belongs to shareholder equity, since the nature is that increase in dividend and expenses causes decrease in stockholder equity. So their nature is opposite. Otherwise, these are not the asset account. Okay, so you can also remember that the shareholder equity increases means credit, shareholder equity decrease mean debit, with two exception: dividend and expenses. If expenses and dividend increases, we have to write it down on a debit side. If dividend and expenses decreases, we write it down on the credit side, right? So here we go, right? So this is just the zoom in version of shareholder equity. So in journal, equity increase mean credit, equity decrease mean debit, right? With two exception: dividend and expenses. Expenses and dividend increase, we write it down on debit side. Dividend and expenses decrease mean we write it down on credit side. But these two accounts, dividend and expenses, belongs to shareholder equity. Although the treatment looks like the asset one, but we do not call this as an asset account. So are we clear? Let me ask one by one. Anthony, Ella, Harry, Kim, Marilyn, Nam, Pinyo, understand?
Yeah.
Yes.
Good. So please, guys, you must remember these rules before the next lecture, because next lecture is going to be a little bit, more, you can say that based on these rules. Okay. So here we go. Now, transaction recording in the books, or we call this generalizing and posting. So remember, we are starting double entry system.